Jürgen Hausel's The Psychology of Money argues that being good with money isn't about math, it's about behavior. By the end of this video, you'll understand why a janitor can die a millionaire while a genius can go bankrupt, and you'll walk away with the mental habits that actually build lasting wealth. No formulas, no jargon, just the weird, human side of money that most finance books ignore. Housel opens with a simple idea. People make wild-seeming money decisions, but almost nobody thinks they're being crazy. Someone who grew up during a stock market crash sees investing as terrifying, while someone who grew up in a boom sees it as free money, even though they're looking at the exact same market. Imagine two kids, one whose family lost everything in a recession and one whose family got rich in a bull run. As adults, they'll handle a windfall completely differently, and both will feel totally rational doing it. That's because your relationship with money is built from your own personal history, not from a textbook. So before judging someone's weird financial choice, remember, they're playing a different game, shaped by a different life. Next, Housel warns that it's incredibly hard to separate luck from skill when judging financial success or failure. Bill Gates went to one of the only high schools in the world with a computer, a lucky break that fed directly into his success, while a friend of his with similar talent died in a climbing accident before he ever got the chance. Both risk and luck are invisible forces pulling outcomes away from pure skill. So when you copy the exact moves of a billionaire, you might just be copying the lucky parts too. The smarter move is to focus less on any one dazzling result and more on decisions that are repeatable and sensible, even if they don't always look genius in hindsight. Basically, be humble about your wins and generous in understanding other people's losses. This chapter tackles greed and the trap of never feeling like you have enough. Housel tells the story of a hedge fund manager who was already wealthy but kept pushing for more through illegal insider trading and ended up losing his freedom and reputation chasing money he didn't even need. The problem is that as people get richer, their idea of enough keeps sliding up the scale, like a treadmill that speeds up the moment you catch up to it. A simple two-part fix Housel offers is to appreciate what you already have and to know your own finish line, so you're not gambling something priceless, like your name or your family's trust, for something replaceable, like extra money. The single most important financial skill, he says, is learning to feel content while everyone around you keeps chasing more. Now for the math trick that quietly runs the whole book: compounding. Warren Buffett built almost all of his fortune, over $80 billion of it, after he turned age 50, not because his investing skills suddenly spiked, but because he'd simply had decades for his money to snowball. Picture a tiny snowball rolling down a very long hill. For most of the trip, it barely grows, but near the bottom, it's suddenly massive. And that's exactly how compounding works. It's boring for ages, and then explosive. Housel's point is that people obsess over finding the highest possible return, when actually, just getting decent returns and letting them run uninterrupted for a very long time is far more powerful. The lesson? You don't need to be a genius investor. Housel draws a sharp line between the skills that make you money and the skills that let you keep it. And he says they're almost opposite. Getting wealthy often takes big swings and optimism, but staying wealthy takes paranoia, frugality, and always assuming your plan could be wrong. He points to investors who blew up, not because they made bad bets, but because they used borrowed money, and one bad week wiped out everything, even though on average, their strategy usually worked. It's like a driver who's amazing at going fast on the highway, but forgets to leave room to react if a deer jumps out. One mistake, and it's over. That's why Housel pushes so hard for building in a margin of safety everywhere in your financial life. Because you only need to avoid ruin once to keep playing the game forever. So what's money actually for? Housel argues the highest value of money isn't a yacht or a mansion, it's the ability to wake up and control your own time. He describes how people report far more happiness from being able to choose their schedule and their work than from any luxury purchase. Because a fancy car impresses others, but doesn't buy you a single extra free afternoon. Think of two people earning the same salary. One is stuck answering emails at midnight for a boss they dislike. The other has enough savings to say no to a bad job. And the second person is richer in the way that actually matters, even if their bank balance looks similar. That's why Housel keeps circling back to savings and independence over status symbols. Because the real prize hiding behind money is simply options. Housel closes by pointing out that building wealth has less to do with how much you earn and more to do with how much you consistently save, since a modest earner who saves steadily can outpace a huge earner who spends it all. Savings don't need some specific future purpose either, like a house or a vacation. Just having a cushion gives you flexibility for surprises you can't yet imagine. Similar to keeping extra fuel in a tank, even when you don't know exactly which detour you'll take. He also reminds us that our goals and values shift a lot over a lifetime. So the plans a 20-year-old makes might feel completely wrong to that same person at 50. Because of that, Housel suggests avoiding extreme all-or-nothing financial choices, and instead aiming for reasonable decisions you can actually stick with for decades, since consistency matters far more than being perfectly optimal for one moment in time. The big idea running through all of this is that money success isn't about being the smartest person in the room. It's about behaving reasonably and patiently over a very long time. Save consistently, guard against ruin, and remember that freedom, not flash, is the real reward you're working toward. If this breakdown clicked for you, hit subscribe so you don't miss the next book we break down.